Hello everyone, welcome to a new video. Today we'll be analyzing the company Southwest Airlines to see if it could be a potentially good opportunity of investment or not. More concretely, we'll be centering the whole analysis of the company based on the recent results that they published on October 22nd, 2020, which essentially were the results of the third quarter of this year. But before we dive into it, let me briefly give you an overview of the topics that will be covered today. So first, as always, we'll be looking at what is that Southwest does and some key metrics about the company that was actually just recently published. Then we will be looking at their stock chart, their stock price and stock related topics. Then we will be looking into their financials, the ones that they recently published. And finally, I will be giving my personal opinion on the stock and a potential entry point based on the current price. Moreover, now I would also like to take the chance to remind you that I'm no financial advisor and that everything that we'll be seeing in this video will be just for entertainment purposes, my opinion, and that you should always do your own research whenever investing in the stock market. So with that said, let's go for it. Southwest Airlines is a US company that was founded in 1967 and that operates flights, mostly domestic ones within the US, but it also offers destinations in Central America. It has been repeatedly awarded for being a great company to work in. Furthermore, until the end of 2019, they could proudly say that they had been profitable for 47 consecutive years, which shows how well managed it is. And now I don't want to spoil you too much, but I think that they will break this strike this year, unfortunately, which is something that really didn't have to do that much with their business, but just with the current situation that we are all living. And on the topic of profitability, based on a graph extracted from Statista, based on the performance of the year 2018, Southwest was the fourth most profitable airline in the world by operating margins with a 14.6%, which is very good. Its fleet of planes is very simple and consists on solely Boeing 737s, and this includes the 737-200, 300, 500, 800 and the famous 737 MAX. This fleet simplification is very good in terms of cost reduction because you only have certain types of planes and everything you buy just has to be for those planes and they could be exchanged from one plane to another, maintenance is easier, and in fact it is one of the strategies that also other bigger, very large airlines such as, for instance, I don't know, Delta Airlines or American Airlines are undertaking now, which is that they are trying to simplify a lot more their fleet and have less models or types of planes. Nevertheless, Southwest had at the end of this quarter a total of 734 planes, most of which are currently parked in long-term storage like the 737 MAX planes, and this represents a reduction of 18 planes if we compare it with the same period of the previous year. Anyways, they plan on reintroducing the 737 MAX planes as soon as they are safe to fly again, as they provide fuel efficiency of 14% reduction versus the previous generation, which is of course very interesting from a company's point of view and to cut costs. If we go now into other statistics and metrics that they published together with the results of this past quarter, we see a clear drop in almost everything versus the previous year, which is pretty obvious. Revenue dropped 65%, the available seat miles were also reduced in 32% as a result of cutting flights, and even cutting these flights, the load factor, which is how many seats were filled in the total of the plane, remained very low with only 44.9%, which is 38% lower than the previous year. The trips flown we were discussing also decreased in 33%. The fares for the flights have also been 19% cheaper, but luckily they have been benefited by the lower fuel prices that have dropped 40% versus the previous year. And finally, in terms of employees, they now have 4.4% less. This is interesting to see, but in the current situation it is much more relevant to be able to compare these results with the ones of the previous quarter rather than the ones from the previous year, because as we all know, the situation is very different. So let's go and check the ones from the previous quarter. So if we check them, we can confirm that indeed the second quarter of the year was much worse, with revenue decrease of 85% versus this quarter only it has been of 65%. A load factor they had of 31.4%, and in this quarter it has been of 44.9%, and 56% less trips flown, while in this quarter it has only been 33% less. After this brief overview, let's have a look at its stock price. Southwest Airlines is trading under the ticker symbol LUV in the New York Stock Exchange. And at the moment of recording this video, the price per share is of $42.79. We can also see that since the publication of its results for the quarter, the stock price has jumped a 7.5%. But why was this? Well, as we will see later on, they reported their biggest ever net loss with almost 1.2 billion US dollars, which is something of course not good, but investors were excited because they also announced during the session that they would start selling the seats in the middle, which is something that they had not been doing up until then, just because of COVID regulations and for safety reasons, but now they would start selling them as of December, so hopefully this should help them generate more revenue. And on the top of that, they also did a bit better than the estimations that they had forecasted for this quarter in terms of revenue drop as well as load factors, which is something investors were also a bit excited about because it seems like it's not as bad as it was forecasted. But moving on and checking the stock graph for the past 5 years, we see that after the drop, its stock has increased considerably and is now only 25% below pre-pandemic levels. In terms of dividend, the company suspended it, of course, due to the current situation and to have as much cash as possible and to reduce, of course, expenses. But before pre-pandemic levels, it was paying a dividend that was roughly of 1.25% yield, which was not very high. Next, it is time to check their very recent financials. So first of all, looking at their income statements, as we were mentioning before, revenues have dropped massively and have been 68% lower than the previous year. The good thing though is that expenses have also gone down, as we could already expect, and were reduced in 33.5% versus the previous year. Nevertheless, the company still reported losses, net losses as we said before, of $1,157 million. In fact, this quarter they have even had worse performance than the previous one, since in the previous one they reported a net loss of, let's say, only 915 million US dollars. So we see that despite having better metrics in terms of revenue drop, load factors and so on, they are not doing better in terms of income statements. Now it's time to go into their balance sheet to see how are they doing right now, and we will of course compare it with the previous quarter and the previous year to see how has the evolution been, because as we all know, all the airlines are taking a lot of debt in order to be able to sustain their operations, as they are burning a lot of cash just to stay afloat. Looking at this quarter, we see that they have a debt ratio of 72.56%, which is still quite good considering everything that is going on. Nevertheless, on the same quarter of the previous year, the debt ratio was much lower at only 62.03%. So we see here a pretty massive increase. And now comparing it with the Q2 of this year, so this past quarter, in which the debt ratio was of 69.44%, we see that they are gradually increasing their debt in order to sustain the company and the operations. But personally, I think that they are still at very acceptable levels, and especially if we compare them with some of its competitors. For instance, American Airlines has a debt ratio of 108%, which essentially means that the total value of their assets is not enough to pay for all of its debt, which is of course very, very bad. Alright, so after having analyzed many different aspects of the company itself and the results that it published this past quarter, it is time for me to give my opinion on the stock and the company itself. Personally, I really like the company, how well managed it is, and also the fact that it is better positioned than its competitors, for instance Delta Airlines or American Airlines, to survive this crash. The fact that they are smaller in size helps them in terms of cost reduction, and they don't have such a big cash burn per day in order to stay afloat. Nevertheless, although I like the company and I do not think that they will go bankrupt as they are very well positioned, I think that their stock is trading quite high. As we said earlier on, they are only 25% lower than pre-pandemic levels, but they are in a completely different situation. A situation from, at least in my opinion, it will take them very long to recover, not just them but all the airlines. I would assume that at least 3 to 5 years to pre-pandemic levels, because we need to think that they need to first report the same profits that they were reporting before, also start paying dividend, and also improve their balance sheet, but because as we just saw, they took on more debt in order to sustain their operations. So concluding, although I personally own some shares at a cost basis of $38 per share, I think that the current price is a bit too high and they are just trading at a premium because they are the airline or one of the airlines better positioned to survive this crash. But personally, at the current stock price, I do not think that in the next 5 years we will see great returns in the stock. In this case, considering the situation, how risky it is, how volatile the market is, and also that the elections are just coming up now, I would certainly leave a bit of margin of safety, and if I were to enter the position, I would aim for the maximum of $38, $39 per share if you really want to have Southwest in your portfolio, but again, I think that at the moment it's a bit overvalued. Anyways, these are just my personal thoughts, and I of course could be very wrong about it, so that's why it's super important that you always do your due diligence before investing in the stock market, in any stock whatsoever. Moreover, I would also like to add that the market has been going up for the past weeks, which for me, I think that it's a bit overvalued, so I find it very hard to really find good deals at the current prices. In any case, that was it for today. Thank you very much for watching the video all the way till the end. If you enjoyed it, then please make sure to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.